Hi traders, this is Brad with the week ahead preview. All right, now looking at the week ahead, let's just have a look at the calendar here. Just going through, it's a very busy week as far as economic data releases go. We've got 3 central banks, well 4 if you count the BOJ weekly press conference. Number of central bank meetings. Now the key focus for the market, this is what all the talk's going to be about, is the FOMC meeting. Okay, no change in the federal funds expected, but they'll be watching very closely the statement and definitely the press conference. Okay, the market will be a little bit gun shy on this after what they saw out of the ECB and the current market move. But what we might see is something very similar to a very big move in the market if the Fed does one of two things basically. If they reiterate their strong stance and strong interest rate hiking mode, then there's a chance for a very aggressive upward move on the US dollar. But if they retreat from that and they go a bit dovish, then the US dollar is going to be on the back foot, and we could see another massive clean out in all the major currency pairs on that one. All right, so let's just have a quick look through these major events. These are the major high impacting data releases that you can expect or potentially expect to see some aggressive momentum in the market. So that's why we're looking at them. To start the week on Tuesday, we do have the RBNZ and RBA coming out with their various bits and pieces. We've got the RBNZ governor speaking. That's probably a bit more of a volatile event. When they do speak, there's a chance of something weird to come out, whereas the meeting of the minutes, they are much more organised. Also the BOJ there to start the week as well. So Tuesday, pretty busy in the Asian session, but revolving around the central banks, and that can often be somewhat hard to predict what they are going to say, but definitely potential market movers. Now, key economic data releases to get started. This is a really good opportunity, actually. Looking at Tuesday's US retail sales and PPI numbers, this is a great number to give the US dollar direction and hence the major currency pairs direction early in the week. So coming into Wednesday's trading, you should really be a lot more confident where the currencies are going, and it should hopefully come from those US numbers. All right, then coming into Wednesday or Tuesday during that US session, you'll get the fortnightly milk pricing. That's very important to the Kiwi. Look for any sort of major variance. Strength by Kiwi, weakness, you're looking to sell the Kiwi on that one. Then this is where we get a little bit busy. Once again, we've got the UK employment numbers on Wednesday. They are can be a very aggressive move on the back of that. And it's a really nice general setup. But don't forget there is, sort of 1, 2, 3 variables. And don't forget to keep an eye on those average earnings. That's what they were focusing on with the US non-farm payrolls. So just be aware where the market's focus changes on that, changes with those numbers. Then you're coming into the, once again, the North American session, US CPI, obviously a very important number. Keep an eye on these housing starts and capacity utilization numbers as well out of the US. They could also come into play. And of course, Wednesday's FOMC statement, the key to the whole market for the week. And as I said, the market will be focusing on that pretty much from the get-go. Okay, it's such a big event. It's probably the biggest event in the market. So if there is any significant changes there, you do want to be watching the currencies. Make sure you have all your major currency pairs up, and great opportunity to look for a break trade on any of those trend lines, upside or downside for that matter. Then you coming into Thursday, the Asian session should get a little bit more lively. We've got the Assistant Governor DeBell speaking, but most importantly, the employment numbers have been significantly strong in Australia, so that should give the Aussie dollar another really good trading opportunity. And as well, going on the back of 3 or 4 really strong economic numbers, if this does come in strong, then we are looking more towards 76, 77 cents for the Aussie dollar. It should get there pretty quickly. If it does come in weak, well then maybe a chance to buy some Aussie on a dip, or just get short on those initial numbers. Then this is where the rest of the central banks really start to come into play. We've got the Swiss National Bank. coming in with their rate decision and statement or monetary policy assessment. And then this is followed by the Bank of England. All right. Once again, we're keeping a very close eye on this vote count for any sort of significant change that could lead to a stronger, the really only possibility there is a change from 0.009 to 1.08, and that is a upward move in sterling. So keep an eye on that. No change in rates expected from those central banks. I mean, market's been going on, chugging along quite, modestly at the moment. So no need to change rates. US market, keep an eye on those US Philly Fed Manufacturing Index. It's a pretty good number for the assessment of sort of manufacturing across the US. So that is another opportunity to be looking at the US dollar. And then as we come in through that Friday session, we're finishing up with some good Canadian numbers again, CPI and retail sales. It's a little bit unfortunate that there are two variables, but once again, if those two numbers line up the same, or come out with positive or negative variance the same, then this could provide a very good opportunity to trade. Don't forget to keep an eye on those oil prices, which do seem to be consolidating around $38. So if oil continues to rally, then so will the other currencies. Now, just having a look at the major currency pairs here at the moment, you should be like identifying. Let me just come into these currencies in their single form. Okay, the first thing you want to be doing at the start of a week is looking at the general bias and direction. Okay, Aussie dollar very clearly in an uptrend. All right, so then you can start to piece together whether you're trading the Aussie. I'll be definitely looking to get long back towards 74.80 for the time being until those FOMC statement and/or those Aussie employment numbers, and looking to get into the Aussie on a number of different crosses, Aussie yen, Aussie Kiwi, in particular, looking to capture a dip in the currency to get long Aussie dollars. This thing is going up, and at the moment, there's nothing to suggest otherwise. What we've seen in the Kiwi, the Kiwi's going to track the Aussie dollar. Okay, there was the surprise RBNZ rate cut last week. That's now factored into the market. We've seen a nice short squeeze, and I can see the Kiwi now going about business. It is going to be tracking the Aussie. I don't expect it to rally as much as the Aussie dollar, so Aussie Kiwi a chance to be getting long Aussie Kiwi. But you can also see here, Kiwi yen is also already moving to the top side. If anything, I think a break of 68 sort of 10 on the top side here is possibly the best opportunity, or even now that interest rate hike has been factored in, even looking to get long back towards this level here, back down towards 66, sort of 85, 90. Okay, I'm still looking for these currencies to move to the top side. And that's the general theme for that. Dollar yen has had a very nice recovery back off sort of 112.20. It's back in the zone. Look for the US numbers here for direction. Okay, this is where you could potentially get a nice trade here. The cloud formation here at the moment suggests to me we're going to be seeing range trading. At the moment, 114, the figure is providing resistance, and you're looking back down here towards 113, 10.15 as support. So I think for the time being, dollar yen trading sideways, but we're going to looking at those US numbers. As I mentioned, we've got numbers that are coming out all week. You want to be looking at the equity markets for direction there on dollar yen, but it's not going to go anywhere just in the short term. Now, just as if you are trading that Asian session, make sure you do tune up your yen crosses: Aussie yen, Kiwi yen, Euro yen, Sterling yen, CAD yen in particular. Now, these currencies have all broken to the top side, so it's a bit of a sit and wait situation at the moment. But fine-tuning your charts, having those support and resistance levels already in place will set you up for to trade when the opportunity does come. They are moving all in unison at the moment, so it's a very nice thing to see when they are all correlating, that it makes trading these crosses easier, and in particular during that Asian session. All right, so let's just come over here to look at the euro. Now, actually, let me just come over here to the main euro and euro cross page. What you will notice when you do have a serious event, looks like my pages didn't save there before. What you can see is generally a lot of these currency pairs, okay, with that move in the obviously following the ECB announcement last week, they cut rates, but the surprise was Draghi saying that that's it for interest rates. We have seen all these charts blown out, so you probably want to be waiting this week to get some better trading opportunities on a lot of these crosses, especially even for euro for that matter. It is still trading to the top side, and one of the key things that we were looking at, or I was reading this morning, as you come into the market, was just how bamboozled the market is. Euro bears get a sore head as ECB sparks surprise rally. Now, there's a lot of surprise, especially from some of the big banks who are still scratching their head, wondering what the hell is going on here with euro. It should be lower. Probably goes to show how short that market was. So we are looking for euro to come off, but at the moment it's sitting up here around 111.5. You are looking for, say, some strong US numbers to really give it a push down, and that's where the best opportunity is here with euro. I think a lot of the euro crosses at the moment are a little bit untradeable, primarily because the charts are all blown out. Technically, because of those, the big spike down and spike up has made charting the euro difficult. But that's one of the benefits of tracking that market, especially looking at these early data releases, right? So if you're looking to get into a nice trade in euro at the start of the week, it's going to come from these US numbers. And what in particular, it doesn't really matter. If we get weakness, okay, euro will rally, and if we get strength, euro will come off. And the best thing about where that currency pair is at the moment is looking at euro. We do have resistance here at 112 the figure, or 0405. That's going to, if we get really weak US numbers, that's the level to be buying through that level. Or if the numbers do come out really strong, then trying to get into the currency as close to market as possible would be the ideal scenario. So that's where the best trade, I think, to start the week on euro is. Now, come over to sterling. Sterling, don't forget, does have a bit of a basket case with regards to the Brexit. Okay, it is creating a lot of turbulence. Of course, that ECB announcement last week did throw a spanner in the works, but I like the shape of sterling. The market did get very carried away getting short sterling, just on comments about the Brexit and what implications it has for the UK, but it's way too early to be calling those impacts. Okay, so bouncing from just under 138.40 up to 144. I mean, that's a hell of an aggressive move and nice short squeeze. I don't know if this is going to be sustained at these levels. You would expect a pullback. Once again, the US numbers are going to be key here, and in particular, obviously the FOMC. But at the moment, just looking at that top side level, it doesn't look like it can be sustained at this point. So we're looking for either strong UK numbers, okay, and once again, looking at those claim account numbers on Wednesday, this is where sterling is really going to come alive, okay, from its own numbers. Also the US CPI, the FOMC the day after, but US retail sales figures up here are going to provide opportunities in sterling as well. If anything, I like a strong US number. It should just drift back down into the range here, back into the back into the 142s. Makes a lot of sense to me. All right, Swiss. Haven't been really following the dollar Swiss a hell of a lot. It's just being sort of banged around all over the place, just following the euro. Don't forget, we do have the Swiss National Bank on Thursday, so keep an eye on any comments out of Jordan. That's where that best opportunity will come from there. But looking at dollar CAD now, this is starting to get interesting. We do have a new low there from Friday, but keep an eye on the obviously the price of oil. And I'll come into that oil in a second. That's the green bar here, and I've inverted the chart here on the left-hand side, so you get that natural correlation, or the natural visual on the correlation on dollar CAD. This thing is in a nice downtrend. If oil starts to fall back towards 35 bucks, then we do have a couple of nice levels here to be getting long dollar CAD. If it continues to rally, then we do have a nice trend line down here, which comes in. Let me just get those crosshairs. Okay, sort of looking around 131, sort of 65.70. That will provide a nice entry there to dollar CAD. But dollar CAD, once again, on Friday, will have some trading time of its own. no US numbers or no significant numbers out of the US. So keep an eye on dollar CAD as we go through the week. Now, what I was going to show you is just check out this crude price here, or the crude chart, I should say. Let me just adjust this chart. This is starting to look really, really nice. Now, I think what we should be looking for is keep an eye on this. Now, I think oil has consolidated. It has to be something weak. I think the thing keeps going. Looking to get long oil here, just above $37 a barrel. Looks like a very good opportunity. You've got a trend line here, 1, 2, 3, 4, not quite 5. This is going to be very good support here. Unless there's some major news out, I can't see the trend changing here. So looking to get long on a dip back down towards $37. Looks like probably could possibly be the trade of the week. All right, so keep an eye on those commodities as well. If you're looking at the various indices as well, you want to keep a close eye on this. This is what the Fed are looking at very closely, the impact on these equity markets. And once again, just redrawing those trend lines and just shoving this across. You can see that this is back in a nice little uptrend. The FOMC statement will be critical to the future direction of those equity markets. So make sure you are watching that Wednesday in the US. It is going to be key. Otherwise, if there's no change from the Fed, then these equity markets should continue on their jolly way. If there's a change in sentiment, then we may see a good clean out here on the equities. And you've got a couple of levels here. So just looking at there, it's 16,920, 1520 on the Dow, and down through 1980 on the S&P 500. All right, so that's where we are with the major currencies. That dollar index a bit blown out. You should expect some sort of consolidation ahead of the FOMC, but that is going to be the key event. So make sure you spend some time, have a look at the major currencies. Even go back to the get up the pages here for the central banks and start to hone in and see exactly what the Fed are up to. They've got a lot of information on their website. Get in there, see who's going to be talking. Of course, Janet Yellen will be, but then you can get a bit more information about where their sentiment lies for the currency itself. Okay, it's going to be pretty interesting and definitely shape the market for the next 2-3 weeks at least. So make sure you are watching that event. Otherwise, just get up your charts. Make sure you've fine-tuned your technical levels here. As I said, all those euro and euro crosses of all levels are all blown out. You want to reassess those. Get all your other technical levels up. It's going to make trading decisions easier as we go forward. All right, thanks for joining us. That's the week ahead. Good luck. Any questions, give us a shout at Traders for Traders. Otherwise, have a good week. Cheerio.